What if you invested £100 every single week? Same amount, same day, in two completely different strategies. That's exactly what I'm doing. Starting from this moment, I've got real money in two portfolios, one passive, one active. And I'm not going to tell you which one wins because I do not know yet. Nobody does. This is my £100 a week investing experiment. In this first episode, I will show you exactly how it works, why I'm doing it, and what you will learn along the way. Stick around till the end. I will show you the real screenshots from the very first purchase I made. Let's get started. Before we go further, one important thing. This is not financial advice. I'm a retail investor, not a financial advisor. Nothing here is a recommendation to buy or sell anything. It's me documenting my own journey, mistakes included. Always do your own research or speak to your regulated financial advisor before you invest. Okay, with that said, let's talk about what this experiment actually is about. Here's the experiment. Every Monday, I invest £100 into a global ETF and another £100 into a portfolio of undervalued stocks I pick myself. I won't hide my mistakes. I'll document every trade I make, good and bad. And once a month, I'll publish the results for everyone to see. This is not a get rich quick video. After years, not weeks, we will actually know whether disciplined stock picking can beat the passive index investing. That's the real question. Let's break down exactly how each side works. First up, the passive side of the portfolio. The rules are dead simple. That's the whole point. Every Monday, £100 goes into one fund, the State Street MSCI All Country World Index ETF with ticker as ACWI. That single fund owns almost more than 2,000 companies across every country in the world. I never sell, dividends get reinvested automatically, no market timing, no second guessing, no changes ever. This is the set it and forget it side of the experiment. These rules are locked and never change. Now, the fun part, the active side of the portfolio. Same £100 every Monday, but instead of one fund, I'm picking one new company each week from a shortlist of 5 to 10 undervalued stocks. These undervalued stocks are identified by my own investing checklist, a real checklist with 40 separate criterias across 6 different categories: a company and its moat, financial health, growth, valuation, management, ownership, and finally the risk. I hold long term and I only sell the companies if the valuation changes or the exit criteria is met. In future episodes, I will open up this checklist completely and I will show you how exactly to evaluate a stock yourself. This is the playlist to stick around for. So here's the proof. On the 27th of July 2026, the experiment started and I made the very first purchase in both the portfolios. This is how both the portfolios looked at the end of day one. I'm recording this a few days later so I could walk you through the full setup. But the money is already in, the clock has already started. I invested in Adobe in the active portfolio. And if you like to know the reason for purchasing this undervalued stock, please check out my video on Adobe in the description. So, why am I doing this experiment at all? Honestly, I'm not trying to prove I'm smarter than the market. I've been investing for a few years now. I've got no professional background in equity analysis. So I'm trying to find out whether an ordinary retail investor like me can use a disciplined, documented process can actually beat a simple global ETF over many years. Same capital, same schedule, two strategies. From here, I just let the results speak. And here's the part people may ask, when does this end? Never. There is no finish line, no target number where I stop. This experiment runs for as long as I keep investing, which means if you subscribe now, you will be able to follow this experiment for years, watching the results monthly in real time. So, what I will share. Every time I make a move, you will see it. As part of my monthly update, I will show you what and why I bought a company, what my exit criterias are, and yes, I will share my mistakes. No cherry picking, and I will not hide my losses. I will also teach and share as I go the same fundamentals that I had to learn myself over the years. How to actually read an annual report, ETF basics, understanding the PE ratios, dividend investing, and something people rarely talk about, the investing psychology. How not to panic when a stock drops 20% after you bought. Finally, every single month, I will bring you back to this exact dashboard, highlighting the portfolio value, total invested, profit and loss, return percentage, dividends, best and my worst performer, my biggest mistake, and the lessons I learned. Same format every time for you to track this experiment. So, which portfolio do you think is going to win? Drop your prediction in the comments, hit subscribe so you don't miss the first and the subsequent monthly updates. And I will see you in the next one. Thanks for listening.